So today we're looking at 4.29 from page 142 of the textbook. From the following information for D-Knowledge, prepare an income statement and a balance sheet. So we've got our trial balance here. This has all been copied over into your template, as well as the additional information as well. Now, in addition to doing the income statement and balance sheet, we are going to also do our journal entries, update our ledgers, adjust our trial balance, and then create our income statement and balance sheet so that we can see the whole process all together. Now remember the additional information, this will include things like balance day adjustments. So the four we have here, we have advertising owing. Our first job is to make the journal entries for the balance day adjustments and then update the ledger accounts. So we're going to start with advertising owing. Owing means accrued, and advertising is an expense. So it's an accrued expense that we know is always a liability. And advertising. For the next one, insurance prepaid. Insurance is an expense and it has been prepaid. We know prepaid expense is an asset, so we debit it for $250. Third, rent received in advance. Now, rent received means that it's rent revenue. It's not rent paid like rent expense, it's rent received. So it's rent revenue received in advance is $275. So it's not an accrued, it's an unearned revenue. It's rent revenue we've received in advance, but we haven't yet earned it. So it's unearned revenue. We know unearned revenue is a liability. And this one's $275. The other account will be rent revenue as per our chart of accounts, as per our trial balance. So the last one, interest owing, is $500. Is this interest expense or interest revenue? Owing means accrued, so is it an accrued expense or an accrued revenue? How do we know? Well, let's look at our past activities. Our very first one up here is interest expense. Do we have interest revenue? It will be in the credit column. There doesn't appear to be any interest revenue, so it's most likely that this is talking about an interest expense. So if interest is an expense, we've got owing, so it's accrued expense. So an accrued expense is a liability for $500. And the interest expense as per our trial balance. Our next step will be to update the expense and balance day adjustment ledger accounts. So, how many ledger entries do we need to make from this journal? Well, we count up every journal entry. We go 1, 2, 3, 4, 5, 6, 7, 8. We need to make 8 ledger entries in total. If we haven't made 8, we're not done yet. So, we need to make sure we read it the same way every time. So, advertising has been debited for $500. So we go to the advertising account. We go to the debit column and we make it $500. If the old balance was a debit and it's increasing with a debit, we make it larger. And the last part is we just write the alternate account. The next one, accrued expense, has been credited for $500. So we go to the accrued expense account. We credit it for $500. And we write the opposing account, which was advertising. The next one, prepaid expense, has been debited for $250. So you go to prepaid expense, you go to debit $250. And we write the opposing account, which was insurance. The next one, insurance, has been credited for $250. So you go to insurance, credit $250. If it was previously a debit, we minus any credits. and we're left with our debit amount, and the opposing account was prepaid expense. We've done insurance, now we do rent revenue, was debited for $275, so we go rent revenue debited for $275. Previous balance is $1,275, credit, so we minus our debits. So the rent revenue opposing account was unearned revenue. Next we do our unearned revenue, it was credited for $275, so we go to unearned revenue. It was credited for $275. So we have our balance $275 credit, and the opposing account was rent revenue. From here. The next one we do is interest expense, debit $500. So the interest expense, debit $500. Our previous balance is debit, so we add new debits, and the opposing account was accrued expense. Same thing over and over again. The last one, accrued expense, credit $500. So we go accrued expense, credit $500. If it's a credit and we add more credits, we get a high credit balance, and the opposing account was interest expense. So are we ready to make our income statement and balance sheet yet? Not yet. We don't have a fully adjusted trial balance, and we haven't finished with our ledger accounts. So the next thing we have to do is do journal entries and ledger accounts for clearing GST. So we want to get rid of the GST collected and GST credits received account. We want to send them to clearing. We need to record it in the journal, post that to the ledger, and then it will adjust our trial balance so we can send one amount to our balance sheet of just GST clearing rather than both figures. So the way we do that is just like a closing entry for a ledger. So if we have a $13,000 credit balance, then we will debit for $13,000, which will give us 0. And the opposing account will be GST clearing. GST credits received, if it's an $8,000 debit, what do we do? $8,000 credit, which will make it a 0 balance. And we want to send that to GST clearing. So we aren't finished yet. We need to do our journal entries and also record it in our GST clearing account. So how do we do that? We've got the GST collected account was debited for $13,000. That's how we read our ledger. GST collected was debited for $13,000. So that's how it appears in our journal. GST collected was debited for $13,000. And the other account was GST clearing. The next one will be GST credits received was credited for $8,000. So we're going to credit GST credits received for $8,000. And the other account was GST clearing, as we can see. So, have all 4 of these been posted to the ledger? Let's see. GST collected, debit $13,000. GST collected, debit $13,000. That was recorded. GST clearing, credit $13,000. GST clearing, nothing. So we have to go GST clearing, credit $13,000. Give us our credit balance. The opposing account was GST collected, as we can read from the journal entry. The next one, GST clearing, was debited for $8,000. GST clearing, debit for $8,000. We haven't recorded that yet either. So if we have a credit balance, we minus any debits, and we get our credit balance. The opposing account was GST credits received. And GST credits received, credit for $8,000. GST credits received, credit for $8,000. That's already been completed. So, next step, complete the income statement, and then we're going to complete the balance sheet. So we've got a few hints here. So for the income statement, we need to be sure to use the adjusted amount for the revenue and expense accounts affected by the balance date adjustments. So these altered our revenue and expense accounts, our advertising, our insurance, our rent revenue, and our interest expense. They've all been changed. The balances in this trial balance used to be, for example, advertising was a $3,000 balance, which we had here, but we've changed it now to 3,500. So we need to update this to 3,500. So we can do this for all of them. So rent revenue is now 1,000. Insurance is now 750. Interest expense is now 650. And prepaid expense is now prepaid expense. We also need to update the asset and liability accounts because we've created some asset and liability accounts. So we'll now add prepaid expense, debit amount of 250. GST clearing is now 5,000. We'll highlight this one rather than alter our trial balance. We'll just highlight those so we know to come back to those. GST collected and credits received. Accrued expense, we need to make a new account. It's going to be 1,000 credit. And unearned revenue will be credit 275. We've done this correctly. Our trial balance should be equal, which it is. And we're ready to do our income statement. So, when we know we have sales returns and cost of goods sold, we've got a trading entity. We need to include those to find our gross profit. So we'll start with sales, less sales returns, less cost of goods sold. So our sales figure is 150,000. Our sales returns figure is 1,500. And our cost of goods sold figure is 75,750. So we'll minus them away and minus away again. And we find our gross profit figure. Then we add other revenue. So we know revenue is going to be the credit columns when we look for it. You can see it here, rent revenue for 1,000. We'll color it in when we're done with it. So we color in the ones we've completed, and we add other revenue. So rent revenue of 1,000. So we'll take our gross profit, add our other revenue. Then we take our selling expenses, our administrative expenses, and our financing expenses, all as per our chart of accounts, to group them to make them easier to find. So selling expenses, we're looking at things like advertising, delivery vehicle expenses, sales salaries and commissions. All we've got for this one is advertising and selling expenses, so we'll add those in. So we include those, put the amounts and tick them off. Administrative expenses include things like office wages, office expenses and insurance, so we'll include those. And lastly, finance expenses are things like interest expense, so I'll include that one as well. So now we take a sum of all the expenses, all the other expenses, and we take our gross profit plus everything else minus our other expenses, and we get our net profit figure. So in the interest of time, I'll just explain. Current assets are the assets that will be retained for less than a year. So accounts receivable, cash, that sort of thing. Non-current assets will be retained for longer than a year. So machinery, buildings, land, vehicles, that sort of thing. Intangibles are things that aren't physical, such as goodwill. Liabilities are broken up the same way into current, things you have to pay within a year, and non-current, things you have to pay over more than a year. And then we'll do our equity the same way. So all we had to do was copy over all the accounts from the trial balance that hadn't been included yet into their asset, liability, and owner's equity area. A few things to note. The names that don't tell you if their account's payable or receivable. You'll know whether they are from debit or credit, and the GST clearing number comes over instead of collected and received.